Good evening, good afternoon, good morning, depending on where you are in the world. This is Hedgen Lee with an evening update for Bitcoin. So clearly on a short-term basis, this really was a bear flag. And if this was the bear flag, then clearly price did break through the bottom trend line and made a lower low. This impulse did not appear. But what you need to see and understand, I think, from a perspective of degree of trend, is that this is a very short-term trend. Okay, this up and this down. I'll show you in a bigger, uh, longer-term chart as to exactly what that means. So this has gone well beyond the 100% retracement. So the Fibonacci in this case would not be applicable because what's happening is that the correction clearly did not finish here. This was not the completion of the short-term correction. It had to go one more lower low. And it did it by making a bear flag. And the bear flag broke down and prices just impulsed down to a newer lower low. So now again, I said this is a very short term, and I'll show you what part of the longer term that represents. So if we come back to this longer term that we had also discussed this morning, this up, the wave D and the E are represented here, D and E. So this is that very small moment of time. It looks like a real big deal and it looks like a crash and crash. But if you look at it in the right degree of trend, the downward symmetrical triangle, which is the wedge, is still in progress. It has not been invalidated. And look, here is the 0.618 that I had circled also. And that is currently at 77.66. And the price went as low as almost there, basically 78.60. And if this is going to be an A, B, C, D, E, it could go as low as 77.38, 76.55. The reason why I'm calling for even 76.55 is because price will come closer and more proximal to the apex right here. The apex is the point where the two lines of the trend, the contracting lines of the triangle, actually cross. Closer the price comes to the apex, the more sustainable the breakout will be. Now here we have still declining volume trend. You'll get a spike every now and then, but the trend is declining. And I think if it does go as close to here, that proximal to the apex, volume then will become a trickle to almost nothing. That is how the symmetrical triangle gets the volume confirmation. So I think one can see that the completion of it can be here. Better yet, let me redraw that. The completion of it can be here. Or more close to the apex. And which would I prefer? I would prefer to have it occur more close to the apex to be able to get that better sustainability of the breakout and the price climb that follows it. So now let's look at this again from this wave 1, 2, 3, 4, and 5. This was the 6,400 or so low that we had. And from there it impulsed to a 5-wave uprise. And from here we can say there's an A, B, C, D, E, and I believe this E could be either here or down here. And the declining volume should still trickle down to almost a pitter-patter, next to nothing. And that is how usually the reason why the volume is declining is because price is moving within contracting lines. And as it gets closer to the apex, its up and downward mobility becomes less and less and less. And that means the volume will pretty much dry up until finally it just surges out. So what is the lowest that we could go to? I think we can even go to maybe even 7180 or so. But based on this pattern of the downward wedge, it's pointing more towards the candidate level of 7766, which is the 0.618 Fibonacci retracement, and maybe it'll overshoot that to 7668. So this longer term perspective on a correction, pattern, volume, and Elliott waves, none of those has been invalidated. All right, I hope you found this to be helpful, and I will get you this again on a morning update tomorrow.